Namaskar dosto. Welcome to my channel Trade Plan Nifty. This channel is my journey in stock market. In this series, Engage the Setup, we are discussing the type of market days. In the first video, we discussed the first type of market day, which is called the trend day. Please check out that video on my YouTube channel under playlist Education. The second type of market day, what we'll call, is called the double distribution trend day. While this day is trending day, it is no way has the confidence or conviction of a trend day. Instead, this type of a day is characterized by its indecisive nature at the outset of the session. During this type of the day, the market will usually open the session in a quiet manner, trading within a fairly tight range for the first hour or two of the session, thereby creating an initial balance that is narrow. The initial balance is traditionally defined as the price range of the first hour of the day, which is extremely important to the professional on the floor of the exchange. They use the initial balance high and the initial balance low as an important point of reference in order to facilitate trade between buyers and sellers. If the initial balance is too narrow, price will break free from the range and auction towards new value, creating a range extension, which is any movement outside the initial balance. After the initial balance of the double distribution trend day has been defined, price will break out from the range and auction towards the new value, where it will form a second distribution of a price. This is the market's attempt at confirming whether the new value has indeed been established. If the trend day is like a sprinter, then the double distribution trend day is more like a jogger. The jogger will take his time to properly stretch and warm up before actually beginning his run. Once the warm up phase is complete, the jogger runs at a moderate pace towards his destination. Once he has finished his run, he will begin the cooling down phase of his exercise. The initial balance is the base for any day's trading and is extremely important to the double distribution trend day. A narrow initial balance is easily broken, while a wide initial balance is hard to break. The fact that the initial balance is narrow on this type of a day indicates that there is a good possibility of a breakout from the initial range, indicating that you will likely see a move towards new value. Think about it like this: if you were designing a coffee table, one of the biggest area of focus would be the base of the table. If the base is wide, you will be confident that the table will remain upright, regardless of any pressure or weight added to the table. However, if the base of the coffee table were made too narrow, it is only a matter of time before the table topples over its weight. Similarly, the narrow initial balance at the beginning of the double distribution trend day indicates that either buyer or seller will eventually overwhelm one side or the other. Once direction is decided, price will freely move towards a new area of value since it is being driven by initiative market participants. Now let's take some example to understand this little better by using Nifty 50 chart. So this is Nifty 50 chart for 12th of July 2024. This is a 15-minute chart. And what we see here that the market opened and then the initial base, that is the first hour of a base, is created. And as soon as the 15-minute breakout has happened, the market has achieved the new value and then again the market started cooling down. So this is one type of a double distribution day. Let's have a look into this example. This is a Nifty 50 chart on 9th July 2024. You see an initial narrow initial base being formed, then there is a breakout, it moves up, and then again a phase of a cooling. This is a third classic example: initial base which is quite a long time, then there is a breakout, it moves up, and then it cools down. Remember, trading is a game of repetition. Trader that can consistently trade the best reputation are those that have mastered the market. First step in identifying your bread and butter setup is identifying type of market day that you will see time and again. Once you quickly and accurately can identify the time of market day that is developing, you can then identify which of your setup you need to deploy. Trading has always been about pattern recognition. I hope this discussion has added value to your trade setup and trading ideas. If you're still with me, don't forget to subscribe to my channel on YouTube, which is Trade Plan Nifty. Stay healthy, trade well, Jai Hind.